My name is Cody Kraus, and I'm a real estate broker owner that's obsessed with everything real estate. Investing, building, selling, developing, farming, you name it. I've been doing this since I was 18 years old, and I've learned a ton through trial and error, and I've met some of the coolest people ever. This is a show where I invite these people on to talk about their experiences and mine, plus everything else real estate. Let's go. Well, welcome back, everybody, to the Everything Real Estate Show. So I'm excited to introduce my guest for today. So I have Mr. Richard Diaz. You'll probably know him as one of the co-hosts of the Loonie Hour, which is probably one of my top 3 podcasts that I listen to every week. I actually drove up to Toronto just to hear Rich and Ben Rabideau and all the Loonie Hour guys and Nick Foch not too long ago when they had a meetup in Toronto, and it was awesome. And got to meet Rich. And I'm actually excited to tell you that I have Rich come into Windsor on September 22nd as one of the co-hosts for what we call the Windsor Economic Summit. Now, I kind of gave you a bit of an intro, but for anybody who doesn't know Rich, who's Rich?
Hi, me. Hi. Thank you very much for having me. I really appreciate it. I'm really excited to go to Windsor. I've never been there. And I've been promised a really exciting trip to a greenhouse. So I hope I love that kind of stuff. So I'm really, really looking forward to it. Who's Rich? I think Rich at my core is just simply an analyst. I love doing research. I love learning about things that I don't know anything about, and I love challenging received wisdom and zombie lies. I think that's probably the thing that drives me, that motivates me more than anything. I think I cut my teeth in Montreal as a researcher, as a writer and researcher for a company called BCA Research, where I did macroeconomic research that would drive investment advice or investment ideas and trades for institutional investors many, many years ago. I was fortunate enough to then work in London, which was an incredible, incredible experience for more than 12 years or whatever. Yeah, London, England
not
was.
London, Ontario.
Yeah. Sorry. Yes, London, England, which unlike London, Ontario, is sort of the financial hub of the world. Maybe rival. I guess maybe New York is probably more so, but the two of them probably duke it out for what's the most important um, place to do financial and investing. I mean, all kinds of different stuff. And it was just an incredible opportunity because you got to sort of just to change your perspective. It was also extremely difficult, very hard, very rewarding. And also being Canadian and proud Canadian, it allowed me to sort of separate myself from where I live. Moving back, I started the Loonie Hour podcast 254 weeks ago, which is crazy because we have not missed 1 week. And that's been an incredible new path and new journey. We thought that their market lacked Canadian content before it was cool. I think Canadians just fundamentally spend way, way too much time thinking about and looking at America. I think Canada is big enough and interesting enough, as well as we have our own challenges. And so we many years ago just thought, listen, let's just talk about what's happening in the global economy, but always bring it back to Canadians, Canada, and make it meaningful in that way. We try to educate, entertain, and inform people. We have fun on the Loonie Hour. We make jokes. I'm usually the butt of those jokes, but that's okay. I don't mind. I'm the most handsome and have the most hair, so that's okay. And then I'm also, and my day job is as an analyst or global strategist for an asset management business. And so we manage money for families all across Canada, and parts of the world as well. Singapore, we have a couple of clients. We have many clients in the US as well. But anyway, mostly Canadian families. And and that's really sort of my day job. It's my focus. How to preserve and grow capital for all types of different families. And that's really what drives much of my thinking. And why, and that's to be honest, that's the most fun for me, trying to ensure that families of all different shapes and sizes and colors can reliably grow their capital and just generate returns in a way that makes sure that everybody sleeps well at night. So that's sort of me in a nutshell.
Awesome. I love that. So when you say you're an analyst, you analyze everything. It sounds like you're very much critical thinker. You like pushing back against narratives, maybe just because to find out how how much truth they actually have behind them.
Yeah, I think curiosity is something that fundamentally just drives me. I love learning about things. I like and then yeah, the reason I call myself an analyst because at its core, that's who I will always be. I love my job. I love the political economy. I like learning about things that affect our life. It just so happens that I focused on economics and finance, but I think that that's just the way I'm sort of wired. Um, and it just suits my job basically. It just suits what I do for a living. I really enjoy challenging those zombie lies that I call them, or received wisdom. I think that not enough people in the media, frankly, and certainly not enough people in finance and economics do that. There are some people who do, and they do it extremely well. I like to try to do that. Of course, I make mistakes, and I've always got open to learn new things. But that's how I
Yep.
think about the world.
So one thing that I think it was you challenged the other day, and I really didn't like it at first, just because I'm kind of
Uh
anti-big
oh.
government, and I think we pay way too much tax in the first place. But I pay a fair amount of attention to municipal politics, just because being in real estate, there's probably
Yeah, for
more
sure.
effect from municipal politics on my
Absolutely.
day-to-day career than there is on provincial and federal and around the world. Um, I think it was you that was talking about how you just think that property taxes have been too low for too long.
Yeah, I
Was it
mean,
you that was talking about that?
I mean that I've definitely said something to that effect. I mean, the reality is that taxes in Canada are simply too high, full stop.
Yeah.
And I think that Canada is facing a productivity emergency, which is a theme that I've talked about for many years. It's a theme that has been written about by the Bank of Canada. And I don't use the words emergency lightly, and neither does the Bank of Canada. The Bank of Canada used that word, and they're supposed to be quite demure, quite sober thinkers. And so for them to use that word repeatedly, it should be a major red flag for average Canadians and certainly the government. One of the reasons we do that is because of misaligned incentives. You know, I think that, for example, income should be taxed a lot less in order to incentivize people to work and to
Yep.
save. And I think that how do you sort of square that circle? And I think one of the ways is that you tax assets. Not all assets. I think, for example, unrealized gains is completely insane. Whoever suggests that is an idiot.
Yep.
But to tax, so you find out how do you incentivize the building of new businesses to encourage people to work more and longer hours, to be more productive, to build businesses that solve problems, rather than what has happened in Canada over the last 30 years is this idea that the only way that you can get rich or wealthy or build generational wealth, et cetera, or even just to frankly to just keep up with higher cost of living is to own real estate. And as from an economist perspective, which is ultimately my education, my background, real estate is not a productive asset.
No. It's
Sorry
supposed to
to
be passive. Yeah.
I'm sorry to offend any listeners, but if you own a building that is, let's say, six rental units with a nice backyard and a couple garage spaces, ultimately there is a utility to that, right? It's useful. People need places to live, but it doesn't necessarily, in a purely economist perspective, that's not a productive asset. It doesn't generate any more income than necessary to generate the upkeep or to pay off the debt. It doesn't solve a problem other than housing. It's not a quote unquote business. It doesn't manufacture. It doesn't provide a service.
You
And
can't export it, right? You
right,
can't
you
sell it
can't
to another
export it.
country.
Right.
Like,
And
yeah.
so Canada has been, in my view, down this path as a function of incentives. And one of the way that you sort of break that incentive and sort of get us back onto a path where we're focused on building businesses, serving sort of more existential needs, selling things to different countries or what have you, is to realign the incentives. And so so my point is not to just raise property taxes and that's it. My point is it would be like a quid pro quo, which is like you lower corporate taxes, and you lower income taxes and you raise property taxes in order to encourage people to start doing, in my view, more quote unquote more productive um, activities, or economic. Yeah, that's really it. That's
So
where I come from.
So essentially you're saying like, hey, when we tax income heavily, it disincentivizes people to go to work and be more productive
Yeah.
and bring more value to the market. And instead we give the tax break to a passive asset, which drives more people to just invest in that, but it's not necessarily putting something out into the market that meets more than a housing need. But it's I need somewhere to live, you have a place to live, so I can rent this from you, but it's
Yeah.
not creating something that is of value to someone else and can be exported or have multiple customers, or yeah, I have a thing and you can rent it from me.
It doesn't actually generate wealth. And people will listening will be like, what do you mean? Of course it's generated loads and loads of wealth. Ultimately, any real estate or many businesses are just like a net operating income divided by some interest rate,
Yeah.
right? And equals some kind of value or a cap rate. I mean, depending on how your perspective. And so a lot of the quote unquote wealth that has been generated is really a function of interest rates. So if your interest rates are, if your net, if net operating income is X and your interest rates are 20, then your cap rate, is something. But as those interest rates have fallen over the last 40 years, right, from 1982 to roughly, let's say 15 years or 10 years ago, whatever, before what we call it ICE cap, a lost decade, what you were just playing was an interest rate game. The net operating income may have been flat, but you're getting more and more turns because interest rates were falling. And so
And the
many
real
people
value didn't necessarily go up of the
right.
underlying asset. It was
Yeah.
that the monetary system was being devalued or
Right.
debased. And so it just went up in value against a currency that was losing its value.
Right. And so you didn't generate new products, you didn't generate new services, you weren't. And so this is at its core, I think one of the many problems that Canada has is like, how do you break this association within young Canadians in particular, and I would argue old Canadians as well, where the only way that you can generate wealth is by investing in real estate and playing what is ultimately a population and interest rate game. And you can see what's happening right now, right? So like now as population growth has shrunk or stalled, in many cases negative in some provinces, and interest rates are rising, all of a sudden, what was supposedly a no-brainer thing has started to sort of fizzle out. You can see rents are going down, and other kinds of thing. And so, what I would like to, and if I was like the king of Canada, what I would like to encourage is young people, instead of saying I want to build a real estate portfolio, is like I want to solve a problem that exists.
Yeah.
I want to build a product or a service that helps solve a problem. And ultimately, that would, in my view, be much, much better for Canada. You'd have you'd have a shift in your investment and your attitude towards real estate that is much more utilitarian, which is, of course, we need it. We need to build it. We need to, manage it, etc. It obviously is important, but I think the level of importance in our society has gone to and was at an extreme, and I think it needs to come down a little bit. I know that's not the thing to say on a real estate podcast, but I'm not going to
Hey, I want
bullshit
to
you.
I want to hear it, and I have a couple things to add to that. So you said like zombie narratives or
Zombie
wisdom
lies,
that's
yeah.
zombie lies and wisdom that's given to you. So in other words, not wisdom, you're just repeating what you've heard. So like something that I hear in council talks or municipal government talks all the time is growth should pay for growth. And so I feel like what they've done is appeased current property owners to allow development by putting all the new cost of
Yes.
development on the new people coming into the market. But it's actually gotten to the point where now you can't afford new development because you're getting to the point where your existing infrastructure is old and it's got to be,
Right.
maintained or built up or swapped out altogether. But you've enforced this narrative of growth should pay for growth, so we can't increase taxes on, the old tax base. We have to pass it through to the new tax base. But now we're in this catch 22 where nobody can afford to build now. So there is no new tax base coming in. So then
I
you
mean, yeah,
naturally,
you nailed another problem that I see in the real estate market, which is you've got a lot of very, very wealthy people because of not because of with respect, not because they're super smart, but they bought their house for a bag of pucks and a Tim Hortons donut.
Yeah.
We had a secular decline in interest rates. Our country loves to print money, in effect. So their house in nominal terms skyrocketed. What we, bungalow used to be $100,000. Now it's $1 million. And so there's an incredible amount of wealth captured in this asset that ultimately is not that productive, frankly. And instead of taxing that asset base, you're actually asking new young people to pay those taxes.
Yeah.
And so to me, that, I've joked before, Canada is of the boomer, for the boomer, by the boomer. You know what I mean? And what it is if you're old, you're sitting on all kinds of wealth. So you're not, and the other thing is you're not getting that that churn, because ultimately what quote unquote should happen is like you're young, you try to generate money, you move, you're into a little house, you raise your children, and then when the useful time or when the utility of that 4-bedroom home diminishes, right? Your children grow up, they go to college, they marry and whatever, and the cycle continues. What you want is to incentivize those older people to leave their home and maybe go into a smaller location. I'm not saying they go into like an old folks home. I'm just saying to downsize, right? Commensurate with
Go
their
from
lifestyle.
a subdivision home to a
Yeah,
semi-detached or a townhome.
So, and the problem is because there's so much wealth tied up in that asset and the taxes are so low relative to income, you've actually created this perverse incentive. And so to your point, you have municipalities that are unwilling to tax all the wealthiest people who basically aren't leaving. And they put all that burden on the young people in society. And so that, in my view, I mean, if you really want to get crazy about it, to me, that's part of the reason why birth rates are collapsing. Children are a luxury good. It's extremely expensive to have children, and that's bad for our society, like on and on and on. And whereas I live in a neighborhood where there's many, many, many old people who live in their very, very large houses. And I mean, what you want is young families in those 3 and 4-bedroom homes.
Yeah.
And by raising, just to put the bow on it, by raising property taxes, you would further incentivize people who generate no income to leave those homes. And not to be punitive, but ultimately, if you want a cohesive society where you're rewarding people for working, and taxing the people who are the wealthiest in a sort of a progressive way, then to me that's something we need to. It's, to me, it's a continuum. It's not, I don't want to punish people, but right now, someone who's young and single in Canada is getting punished, and someone who's old, wealthy, and frankly has already sort of had their life is getting coddled and rewarded. And so to me, there's a philosophical and fundamental change in the way that we tax people and incentivize behavior.
And so, like, when you preface this whole thing, you said, "Hey, hang on, before you take what I'm saying out of context. I'm already telling you that I think Canadians are taxed too much."
Way
And
too
so
high. Way too
when
high.
you say something along the lines of, the wealthiest, like we hear the tagline, the wealthiest should pay their fair share. Well, the wealthiest in Canada
They
pay
do.
the like lion's share of the tax base, full stop, kind of
They
like you
do.
said. It's just you're saying that maybe the makeup of it should be different. So instead of putting a 52% income tax on, incomes over 250,000, that's kind of where we're at in Ontario, tax that less and apply a different tax to some of the assets that they have so that those values don't go crazy inflating because, hey, I can actually write off the property taxes
Yeah.
against my second residence and
Yeah. I
all that
mean,
kind of stuff.
you incentive, like, show me an incentive and I'll show you a result.
Yeah.
And in Canada for far too long, we've been incentivized to buy homes and real estate, lever those up rather than build businesses. And you can
Yeah.
and it's that is, like, again, sorry to say, but real estate in and of itself is not a productive asset. It doesn't generate wealth. People, which is, I know will shake some people and make some people uncomfortable, but you cannot compare a home that's worth $2 million with a factory that's worth $2 million.
Yeah.
right? A factory
One's
will,
one's maybe producing canned goods that people are going to eat on a daily basis,
right.
and you sell to the store and whatever. Whereas the house, someone just lives in it.
Right. Like a factory will employ people, generate income taxes. They will provide a good or a service in perpetuity. A home, you might have one guy or a lovely couple just living in there. And so do you know what I'm saying? Like, like if a business might
You know what
invent a
the
new pharmaceutical or product or
Yeah.
whatever.
You know what the crazy thing is too? It's so easy. Like, if you just compare one against the other, it's so much easier to get a loan for a $2 million house than it is to start a $2 million business or buy a $2 million business
Absolutely.
too.
So that's also a function. I think so. One of the problems we have in Canada, again, is incentives, right? We talk about like, I mean, frankly, I know a lot of people, a lot of young people I know have made more money just buying a house before COVID than they ever did in the businesses that they and the job that they run.
Than they did at work the last 5 years.
And to me, that there's something intrinsically like wrong about that, right? It's not the same as owning a stock, right? A stock, you have a claim. When you own a stock and you own Apple, you have a claim on the future cash flows of a business that solves a problem. Whether it's they dig for oil or they make roads or they produce chemicals or pharmaceuticals. When you own a home, it's just fundamentally not the same. Yes, there's a utility. Yes, it's important people have homes and are able to afford them, but that what we need in Canada is to break that link between generating wealth, meaning you buy a relatively useless asset, you lever up, and you hope that the country makes bad policy mistakes like import 3 million people in 2 years, versus trying to solve problems for society. And I think once we
Yeah.
sort of get back to trying to solve young people in their brain, I want to build a business that solves problems. I think we'll deal with a lot of the issues we have. And I mean, that's like a very like top thing. That's the kind of thing I think about when I'm, on my own. That's not what we do for work. Obviously, at IceCap, it's a much more sort of tactical and tangible thing.
Yeah.
But ironically, the same philosophy that underpins sort of that higher level thinking underpins our investment thesis and helps us position for our clients, because the era of falling interest rates is over, right? We from 1982, one of our big investment themes is that we are at the end of a 40-year interest rate cycle. And investors, homeowners, real estate agents, everybody needs to some sort of come to terms with the fact that interest rates are not going down anymore. Interest rates are going to rise. And that should change people's perception and thinking and on where they invest money, what the risks are and why, and where their opportunities are, because there's always opportunities.
So a couple things there. So like small town Ontario example, we see this in the community that I live in. I feel like you kind of nailed it. Subdivision home built in the 70s or 80s, owned by a boomer, kids moved out, 4 beds, 3 baths, 2-car garage, quarter-acre lot. In our area here, that would sell for, somewhere from 7 to 900,000. And the problem is once the boomers go out and start looking at what a new semi-detached home on a 30-foot lot is going to cost them, the house ends up being the same amount of money. Then they have to do the driveway, the fence, the appliances. So then they go, well, hang on. So I have to get a mortgage or come up with more money in my 70s to downsize from an estate home to go into a single family home. So that they just don't.
Yeah.
And so they stay in this home until they need to go into the nursing home. But you're saying naturally in a normal cycle where, maybe there's not so much development charges put on the new product, it would be reasonable to think that they could actually downsize their budget when they downsize the size of their
Yeah.
home and go
Yeah.
into a smaller. And so that makes a lot of sense. And what we're actually seeing a lot of people do right now is get out of home ownership in their 70s because we have such a huge supply of built for purpose rentals coming
Yeah.
to the market that they go, well, hang on, the market's been on a tear. Why don't I sell my $800,000 house, put six, 700 into we'll put some of it into GICs,
With
we'll
ice
put some of
cap.
it into a fund, maybe with ice cap. Yeah. And Rich, hey, if you can make me, 7% on my $700,000 nest egg, that's 49,000 a year. And you know what? That's going to pay for my rent and leave me a little bit of money aside. And so I'll just go from owning a home to not owning one, but they skip the step in downsizing because it's actually more expensive to downsize because the
Yeah.
new product's so much more money. Now, you touched on the lost decade. Do you want to expand a little bit on that?
Yeah, sure. So, I mean, from 1980, so 1982 is basically the peak in interest rates, plus or minus a year, plus or minus whatever country you're in. But
Yep.
from 1960s to 1982, you had rising interest rates, and rising interest rates are difficult for everybody. They're difficult for the assets, for highly levered assets, right? Because literally your interest rates are rising. So that puts
Yep.
pressure on those valuations. It also makes things difficult for financial condition. Tighter financial conditions is obviously more difficult for the equity portion of that capital stack. 1982, they peaked, and we basically had 40 years from 1982 to sort of 30 whatever years to 2010 in a basically a straight line down. And that was great for people. It made real estate investors seem like geniuses. It made people a lot of money. Easier and easier financial conditions were great for the equity market. And then you had 2008 financial crisis, and countries basically went and spent an incredible amount of money to soften the blow from what would otherwise have been the collapse of the global financial crisis.
Yep.
The problem is in a normal, quote unquote, a normal world, when you're spending that kind of money without any view of where it's going to come from, it would send interest rates to the moon. But unfortunately, banks, which is basically the backbone of our financial system, have an incredible amount of regulatory capital that is basically government bonds. And in order to protect those banks from massive losses and literally the collapse of our financial system, central banks stepped in and did all kinds of alphabet soup in order to control the yield curve. So the alphabet soup includes QE, ZERP, or zero interest rate policy, or in Europe, you had negative interest rate policy, so NERP, and all kinds of sort of weird and wonderful interventions. So they printed money, they absorbed capital, blah, blah, blah. And what that did, in effect, was it kept the yield curve pinned to zero or near zero. What that means is that you have a lack of price discovery in the bond market, and bonds are critical to pricing every other asset. And so that was about 10 years. We call it the lost decade. I mean, it's not exactly 10 years, but whatever. Let it give us some poetic license. And that 10 years of a lack of price discovery in the bond market created all kinds of misincentives, but also it just created risk in other pockets. So in one example that we talk a lot about is because the yields were so low and investors needed to go out, so investors sort of searched for yield. And so investors would go further out the risk curve to search for that extra yield. They went to, for example, investment grade bonds, then junk bonds, but then they changed the name from junk bonds to high yield bonds, and they went to MBS and whatever. And now the most recent one is private credit. And the issue is that they were going further and further out the risk curve, but getting less and less and less return. They did that because during those 40 years of decline, that was actually it was actually a magical time for investors because you have the extreme volatility of equities, which everyone sort of signs up to. And then you marry that with steady compounding returns of bonds. And that marriage it worked out fantastically well. You'd have the upside and downside, you'd have the volatility pair of equities and like an experience that you're happy to sign up to, paired with the steady compounding return of bonds. Move forward to the end now, we're at a stage where that sort of game is up. Central banks are sort of have run out of both the political and I'd say like almost physical ability to control the yield curve. And you're seeing interest rates rise. And a lot of that, what we took for granted as investors, so that old way of thinking has sort of basically come undone. And so but unfortunately, a lot of people in our industry are sort of haven't reconciled that reality. But bonds, for example, have basically returned 0%, including interest payments over the last 5 years, which is
Once you
incredible.
factor in like the decreased value of the money.
And you're I didn't even get into that, but you're 100% right. So that's in nominal terms. If you include some kind of depreciation from inflation, it's massively negative. So think
Yeah.
about
And
it. You have
so what they did worked until it didn't.
Yeah,
And now that it doesn't, we're in this kind of like transitory period where,
right, but not everybody's prepared for it, and certainly people's portfolios are not geared for that. Ours is, which is something that we talk about a lot. I'm sure there's other people out there as well, but the big. I don't want to make fun of the banks, but there's still this idea that we are in this old world, and we're not. We're in a world, and the reason, by the way, we're in this new world is because of inflation, a lack of productivity growth, an unwillingness or an inability of governments to run balanced budgets. We're in an inflationary environment, notwithstanding what's going on in the Middle East. It was already sort of happening because of years and years of underinvestment in these very, very critical commodity sectors. And so we're in this world of rising interest rates, and it's going to put an incredible amount of pressure on all these different types of asset classes.
but the
And so,
banks, the bank, like in Canada, we have six big banks,
yeah,
really, right? And so they're heavily involved in what's going on with the bonds. And so if they were going to tell you that, hey, interest rates are going to go up like crazy, then all of a sudden they're not going to sell all the mortgages. Like the same people that are you're advising your investment portfolio are also the ones holding the bag on all the underlying loans and assets too, right?
yeah, we're not exactly a big fan of the banks.
Yeah.
We think they obviously have their use. There are obviously loads and loads of smart people who work there. They're incredibly profitable because it's basically six banks, and it's not exactly a super competitive market. It's one of the things actually
Is it
that's,
oligopoly? Is that the
I
right?
mean, yeah, it's exactly right what it is. And they have no incentive to sort of rock the boat. But the problem with Canada is that we don't live in a vacuum. And one of the other sort of key pillars of our thinking at IceCap is that global risk is synchronized. And so that's why, like, what happens in another country can have, speaking of COVID, can be quite contagious, right? Can affect your capital markets. And we're seeing it right now. The US's bond yields are continuing to rise. You can see what's happening in Japan. There's worries about the ability of the Japanese government to pay down its debt. Europe is suffering some serious issues with productivity, growth, and massive unsustainable debt levels. And so, a country like Canada, even though the government debt at the federal level might be lower, you're seeing the bond yields continue to rise. And what's going to follow those bond yields? Mortgage rates. And so, you can see there's a real risk that there's pressure on our mortgage rates, not because necessarily of what happens in Canada, but from outside.
So when you say that interest rates are going to go up and you're talking about the 80s, like I deal with a lot of younger, home buyers and sellers and so it's funny hearing their parents weigh in onto the conversation. They're like, "Don't even worry about it. Interest rates are 6%. They were 22% when I bought my first house in 81 or whatever, right?" And the thing I always tell them is like, "Yeah, but your mortgage was 50,000. Ours has another zero on the end of it."
Yeah,
Right? There's
exactly
some
right.
pretty big implications if all of a sudden our interest rates go up 4%, let alone yours going up, 16%. There was extremely difference in consequences based on just like the size of the underlying loan. Um,
So
so
that's
I'm
so true, by the way, for not just us. Sorry to interrupt you, but that's true for every country in the world every rich country you can think of.
Yeah. And so I respect that, you've gone and worked in England and your perspective is worldly and all that kind of stuff. Like I live in this small town Ontario. I pay attention to municipal politics. It's funny you were saying, Canadians love listening to American politics. I feel like we have more opinions on American politics than we have on our own because the last election
100%.
didn't make a whole lot of sense in Canada. But anyways, political opinions outside of that, I think it was decided by the boomers, and it was around protecting their assets is the outcome that we got from that. But like, uh, where was I trying to go with that? I guess what I'm trying to say is like there's hugely different consequences from, like I said, going from 3% to 6%, which is what we saw in 22 on a say a 5-year fixed loan for a house, for example, right? I live in this little bubble in rural Ontario where I look at what's happening inside of our real estate market. And I honestly thought the bottom was going to fall out of our real estate market locally in 2016 because forever the prices went up somewhere from 3 to 5% a year on an annual basis. And then all of a sudden we had a couple years with double digit growth. And I'm like, okay, pump the brakes, bottom's going to fall out of this. And then all of a sudden it just went on a tear for like another 5 years. 2020, we saw a 20.5% average house price increase in our market. 21 was 34.5. And so because I don't have the context in my mind of experiencing, interest rates being ratcheted up at a fast rate. I didn't have experience with huge, unprecedented, immigration rates to Canada. I fell into this trap of thinking real estate prices couldn't ever go down. Look at all the people that are trying to buy homes, and it's so slow to build homes in Canada. We just have an incredible amount of demand versus our actual supply. Like, okay, I might as well start buying as much as I can because I think this is the game of Monopoly now. Only I didn't think that the bank would actually increase the rates by 1% at one meeting or change immigration from 1.3 million in one year down to 250. So like you look at it from a more macro view where you're considering global politics. I mean, again, we make a big deal out of everything that's happening with Bank of Canada, but like, what's the actual impact on the world markets of a Bank of Canada decision versus a Fed decision? So like, how are all these global factors, federal factors playing into small town Ontario, small town Alberta, or even big city, BC or Ontario? Like, I'll just throw all that out there and say, okay, like I'm
You
considering
asked
local
five
factors.
questions in one.
I know my mind's in 1,000 different places right now. So I'm
I've,
gonna
I've
spew all that
written
out there, chuck it at the wall, and let you handle it.
I've written four, but I feel like I've missed one. You actually asked five. So like
Sure,
you made a really, really good point, and we'll just do it in order if I can.
sure.
I
Yeah,
wrote down. We'll do it in order. So you mentioned the point that like interest rates aren't that high, quote unquote, relative to the 80s. However, your point about the relative debt is such an important one. So I'm just going to use the US numbers because I'm looking at the chart in front of me and I have to dig up the Canadian, and just for the sake of time and
sure.
brevity. In 1980, US debt to GDP was 40%.
Okay.
Interest rates were 18. Let's just say keep things around 15. Let's just say keep numbers easy. Now, US debt to GDP, similar to Canada, is more than 100%, and interest rates are four
So
and a half.
it's 250x'd.
Right. So you're 100% right. Like a increase of, let's say, 100 basis points now, your debt is much, much, much bigger and much higher. So that's the word leverage, right? That is the issue. And so your
Yeah.
point about, yes, interest rates were high, 18%, and your mortgage might have been 50 or 100,000. Now, any marginal increase in that interest rate is on a mortgage of a million or
It's a
900,000 or whatever.
disproportionately higher
Yeah,
effect. Yeah.
disproportionately higher effect. The other thing that's important to note is that wages have not not kept up. And so that's also really important, right? So especially if you do things like house price to income ratios, they are massively, massively out of whack. So not only
Yeah.
is your debt level higher, your income didn't grow as much. And so that marginal increase in interest rates will have a disproportionate effect. So your point on that is really important, is really interesting, and a valid one, and I think something people don't consider. Your point. Then there's two other things that you mentioned, which was population growth, which is, it cannot be understated how horrific the Liberal Party's immigration policy shift in 2015, 19, and 2021 were and have been and are and will be.
Yeah.
There was a material and important shift in not only the quantum of people coming to Canada, but the type of people coming to Canada. Now, that might offend some sensibilities of people who are listening. Thankfully, there's lots of evidence to support this view, and B, the Bank of Canada has literally written a paper on this. It's a 42-page paper. You're welcome to look for it. It's called
And also,
Wages.
you're not talking about race or country of origin. You're saying how productive they were in the market and what they did
They
once they come to
they
Canada.
lit the Bank of Canada concluded, which is what a lot of people obviously know see with their eyes, that the Liberal Party changed the rules on who was allowed to come and the quantum. And that had the horrific unintended effect of really, really hurting young people and working class people. So in the past, you had it was still high, the immigration to Canada, but it was high skilled, high wage labor. They went and tripled population growth, and they lowered the threshold of who could come in. So you went from high skilled, high wage labor to low skilled, low wage, which is why someone like you in 2016 or whatever, 2017, you're like, oh, things are about to fall, the bottom's about to fall out of the real estate market. They went effectively and imported literally millions of people who more likely than not were going to be renters, and more likely than not were going to be working in the lower skilled types of employment like food retail, accommodation, et cetera, et cetera, et cetera. Yep. That had a profoundly negative impact on young people and working class people. Naturally, young people are the ones who go work in Tim Hortons. It had a negative effect on productivity growth. If you were used to be importing engineers from India, and now you're importing people who are barely graduated high school, clearly an engineer from India is going to be more productive than a person who just graduated from high school from India.
And yeah, so, and often there was like a need associated with it too, right?
Absolutely.
Like an employer would have to prove that they couldn't hire a Canadian to do the job, so they had to go to another country to get these people, right?
Yeah. So it cannot be understated. And by the way, and something that people forget is the quantum. So had they kept the number the same and just changed the, let's say, quote unquote, quality of the new entrant, it wouldn't have been good, but it wouldn't have had as profound effect on our economy. But the problem is that they increased the number, and I can tell you, I have the chart. You know, from 1982 to 2000, so from 1980, from January 1980 to December of 2015, the average population growth, this includes births, deaths, people leaving, people coming, was 319,000 a year.
So that's natural and immigration.
Right. That was from 1980 to 2015. From 2016 to 2020, let's say 4, before they really started to, it went up to 1.2 million people. The average.
And that's not because
1 million
started having a lot of babies. That's not because we started having babies. No. Like our birth rate's around 1.7, 1.6, right? So that was purely an increase of immigration.
So that is a horrific policy mistake. You've tripled your population growth, and 96 or 7% of it was new entrants. And remember, they're no longer high skilled, high wage. They're not literally engineers and doctors. They are now, a lot of them are high school graduates.
Now, was that a way for like politicians to say, hey, our economy is great. Look, our GDP is increasing, but they increased the population by 3% that year just on immigration?
Yeah. So that is a horrific policy error in it. I literally studied economics my whole life. Like you cannot do that. I mean, let us set aside the social frictions that inevitably causes. Think of healthcare, schools, infrastructure. And again, if you're a newcomer and you're young to Canada, you're not going to be buying a semi-detached house in a leafy neighborhood. You're going to be renting, and you're going to be competing against other people who are working class, and you're going to be competing against younger people. And so it was a horrific policy decision. Now, my view is, I always ascribe stupidity, rather than malice as for why these things happen. I think they just weren't that smart, frankly. They didn't think it was going to happen. They lost control of it. And that's why you've seen them basically pull back. And that's why you've seen 3/4 of negative population growth in Canada, which is basically hasn't ever happened since like World War I, I guess, or something. You know what I mean? It's like in living memory, it's never happened. And so it was such an outrageous mistake that's why they were like, oh shit, we got to change this. But the reason I bring that up is because there's so many sort of negative knock-on effects from that in my view will take a decade to flesh out.
Okay. Right. How do politicians fix that moving forward? Like, what does the next decade look like?
I don't think that there's only time will deal with it. Right. It affected housing rates. By the way, like it is so mind-bogglingly stupid to have done that. I mean, again, they could have increased population growth. They could have doubled it, and that was still would have been bad, but it would have been not as bad, right? And the
That's
other thing that people
5xing it. Yeah.
and like literally, and so the other thing that's really fascinating, again, from a nerd perspective, is it's always what happens at the margin. So it's marginal increases, right? It's so that extra person actually puts an incredible amount. It's like, again, we talk about leverage. If you have 10 people and then everybody has a seat, and then you add an 11th person, it does it's if there's still 10 seats, it puts a massive amounts of pressure on that marginal, that extra seat that's available. And you have acrimony. People are upset because they used to have a service that was really well taken care of, and now they no longer have access to it at all, right? So that it's not linear. In the pain is not linear. It can be right. It can be an exponential in some cases, which is why, for example, you know what I mean. And so I'm horrified at the same time as I'm fascinated by what happened, really.
It's a crazy experiment. It just sucks to be one of the rats that are living in it, right?
That's exactly right. And your point about population, or your point about GDP per capita is a really fascinating one. So Canada's GDP per capita basically hasn't increased in 8 or 9 years. There's been some upward revisions to that data, but in effect, since 2018, it's effectively been flat as a function of, but the headline numbers look great. If you compare Canada's performance to the 38 other countries in the OECD, 37 other countries in the OECD, we were second worst after Luxembourg, which is, and not even a real country. There's like 60,000 people who live there. It's basically a tax haven. It's like it's not a real place. Sorry, people from Luxembourg. And so effectively, we had the worst economic performance on a per capita basis of any country in the rich world.
But
and
per
so
capita doesn't make the headline that just the GDP does, right?
Yeah. I mean, yeah, which is fascinating. So, and like, think about it is a massive lever. If you think about interest rates being a lever, zoning might be a lever, taxes might be another lever that you're pulling on. You could not think of a more important lever than population growth. And again, they tripled the number.
Yeah.
And so that is going to have profound, in my view, in some cases, devastating effects on Canada that it's going to take 10 years to flesh out.
More than triple though, right? Like it went from 300 and whatever thousand to
19, yeah.
1.5.
No, it wasn't quite 1.5, but whatever. It was, let's say, one. Yeah, you're right, but it was 1 point. So 3 times 3 is 9, so it was more than triple. You're right. Excuse me.
Yeah, and then full stop to 0.
Yeah. Yeah. And so I don't think people understand how horrible that was. And you always have to qualify it. You say immigrants are good, like my parents are immigrants. You cannot triple the number and not have devastating impacts on healthcare outcomes. Rent. Again, rich people don't rent, like wealthy people own their homes. Like it's young people who are looking for these jobs at these certain companies that we all know. It's, you know what I mean? And so to have that, and you can see it across the board, and so let's be more positive. That mistake is being sort of unwound. We'll see if they stick to their guns, because I think, if we have another couple of months or years of poor economic growth, I think that there's going to be a real incentive to open the floodgates again. You have a new set of voters who may or may not reward you for letting you into this wonderful countries, et cetera, et cetera. Anyways, I don't want to get.
I think some really empty colleges and universities too, right? That's a big thing that's happening in Canada.
And you can see it was a farce, right? Like these people were obviously, and the sad thing really is that everybody lost, right? Because if you're somebody from one of these countries, you were promised something. Right? Canada's an amazing country to live in. If you can afford to live place, if rent's affordable, if you have jobs or whatever, it's a great place. So you
got here and you couldn't get a job and you couldn't afford a house.
Yeah.
And the free healthcare in quotation marks, you couldn't actually get a doctor.
Yeah. I mean, I don't have a doctor. But so it's actually amazing. So everyone lost except maybe the telecom companies. They won, right? The banks certainly won. Asset holder, people who own an apartment building in downtown Toronto, they want, you know what I mean? There was obviously some winners. There's always winners and losers to these kinds
But
of
but it
policies.
was a few.
It
It
was a
was a
very narrow
percent.
set. Yeah, it was a
Yeah.
very narrow. And then, I mean, you and I can have a beer when I'm in Windsor, and we can talk about the social issues that this obviously engendered. Because obviously there are many, but it's actually honestly, like I said to you earlier, I'm fascinated as well as horrified by it. But like, it is a fascinating experiment, right? Like, it was, and that's why also, by the way, looking forward, I think is why also Canada will have a lot of really weak growth,
Yeah.
because you can't, the other the opposite's true too. If you have negative population growth, it's very hard to have excellent top line growth unless you have strong productivity. And we started our discussion with Canada faces a productivity emergency because we don't invest, asset like investment into non-residential structures and equipment has been terrible for the last 10 or so years. And so
Okay,
so
so
Canada's like in a real, we're in a really tough spot. We didn't even talk about the tariffs. I think that's frankly a distraction. If all the tariffs were removed tomorrow, snap of a finger, none of it would fix the structural issues that Canada faces.
yeah. Well, and so actually, I was going to say, I want to be mindful of your time. We've almost already been an hour. I have kind of three questions, and I feel like if we start talking about tariffs, that could be another 45-minute discussion on its
Well, you'll
own.
have to
So
join us in Windsor, and then maybe
there we
we
go. We'll
can.
talk about it live. Yeah. So when you say that interest rates are going to have to go up, and so for the world of me and my listeners here, which are mostly in the real estate world, whether they're realtors or mortgage agents or investors in property, things like that. I mean, just to real world terms, like what's our prime rate right now? Is it around 5%?
I think so. I sorry, you got me. You got me. I'd be
No,
lying
that's
to you if
okay.
I told you what it was.
It's somewhere, I think it's in the high fours. And so right now, if you go get a 5-year fixed mortgage as an A borrower, you're probably in the neighborhood of like 4.4% for a 5-year fix. So like you say that interest rates are going up and they're going to be going up in like for the foreseeable future. What's up? Is it 6? Is it 8? Is
Oh,
it
I
10? Is it
mean,
12? Like
the future is very hard to predict,
I get that.
and so I'd be lying to you if I have like a specific view on this. I think, and by the way, it's not going to be a straight line. I think that's the other thing that's really, really important. You will have periods where interest rates will go down a bit. I think that what matters for us as investors and how we position our portfolios for our clients is what is the trend, and is that trend strengthening or not? And so I think the trend is for higher and higher interest rates, because what's happening right now is unsustainable, and central banks have kind of lost control of the yield curve, if that makes any sense.
Yeah, and then I wonder
But
like is the Bank of Canada going to be more proactive instead of reactive this time around?
no,
Like
the
they
Bank of
had to
Canada, no,
know
no, no,
that
no central bank in the world is proactive. This
because
just doesn't
like
exist.
2021, our prices here went up 34%. And at that point, the population had already grown and like they were still keeping interest rates low until I think it was April of
Yeah.
22. Like what were they thinking in 21 or 2020 when wow, our housing prices doubled in 2 years? Like who would have saw that coming? And when we say negative real interest, it's because they were charging us. Like I had a 5-year note signed at 1.92 on my
Yeah.
house. And so when people say negative real interest, they're going, yeah, but inflation was 5%. So if I can borrow money at 2
It's
and
literally free
inflation is
money.
5%, I'm actually making 3 if I borrow. Normally I'm at a loss if I borrow.
Yeah. So you talked about negative real interest rates, and it's, if you follow me on Twitter, you'll know that I've talked about this a lot. I think negative real interest rates are horrific, horrific central bank policy, and thank
Yeah.
God they've moved away from it slightly. You nailed it. It's something that I think is like fundamentally important and is not talked about enough. And it basically, in my view, is the catalyst for Canada and other countries, by the way, housing bubbles, and why people were incentivized to not invest in proper businesses and productive assets. Um, Positive real interest rates, meaning you need to generate a real return, um, incentivizes prudent asset allocation, and rewards savers. And negative real interest rates does the opposite. It incentivizes people to
People that
borrow.
just lay it out there and borrow more they can
It
ever afford
does.
to pay back. They just hit the timing really well.
But your point is extremely well made. You're almost literally being paid to borrow, right? I mean, that's, and you'd be stupid not to. And if you look at, it's not just Canada. It's like, I used to joke, show me a negative real interest rate and I'll show you a housing bubble. Because what is the easiest asset that you can borrow against? Housing. What do banks like to lend against? Housing. And so we're starting to see a shift. I think Canada's gonna, because Canada's different than the United States, but because we have negative population growth, I think core inflation is going to be under a lot of pressure, which means, to your point, we're going to have positive real interest rates, which is going to put a lot of, again, the word pressure on these asset valuations. I think,
So
it's a fascinating
I,
time. I think the other thing, that there's so many opportunities. Like, if you're an investor, it's like, yes, bonds might be terrible, but the commodity space is something that we are spending a lot of time for our clients, right?
yeah,
Oil, copper, like gold is something that we're really, because these are things that, that they are sort of, if you have a situation where inflation is going to be running hot and interest rates are going to be rising, meaning bonds are terrible, where else do you allocate your capital to protect yourself, to take advantage of this volatility? And there's loads and loads of opportunities that we've identified, that sort of
businesses,
that
commodities,
yeah
things that
that
produce real value
that
or have
match that map.
utility.
But also, the commodities is not just because of inflation, it's because we've spent the last 10 years. Oil is a perfect example of like how crazy Canada is. Like, here's a zombie lie. Maybe I'll leave you with this. The idea that the earth, the human beings, will stop consuming fossil fuels is completely untrue. Human beings consume way more fossil fuels today than they did yesterday, and will continue to consume more fossil fuels going forward. That's because fossil fuels are super useful,
Yeah.
and they're everywhere. They're ubiquitous. And until we make a wholesale change to something that can have, like, nuclear power, all this bullshit about renewables, the sun sets, the wind stops blowing, and storing energy in the form of battery takes an incredible amount of energy to produce the battery. Whereas you can, again, I think nuclear power is ultimately going to be the answer, but natural gas, coal, crude oil, etc. And so one of the big insane lies that Canadians were fed was this idea that crude oil is not useful, that they're going to stop consuming it, and as a function of that, not just Canada, but many, many countries stopped investing in those systems. And they are systems: refining, transportation, exploration. Those are systems that not only take a lot of money just to keep at a base level, let's say
But you
upkeep,
can't turn the light switch back on and just start producing, right?
right? It takes 10 years to build. Like, these things take a lot of time to plan, find the capital, allocate the capital, put the digger in the ground. You know what I'm saying? Like,
Yeah.
these things take time. And so if you don't keep up with your quote unquote payments, in fact, you do the opposite where you tell everybody, oh, we don't need this anymore. Then when you have situations like we have right now, which is the Strait of Hormuz is closed, instead of having all these redundancies that would have been otherwise baked into our pie, then you have extreme stress. Make no mistake, China has not stopped consuming coal, nor will they. They just, last year was a record in terms of coal-fired power plants that were suggested. India, which is one of the largest countries in the world, they've doubled down on it. Indonesia is one of the largest countries in the world by population. They're into it. I mean, and the problem is that you've had 10 years of a lack of spending, or capex is what we call it. And so we think that there's not only a supply crunch, sorry, demand. We think there's a demand crunch, meaning there's going to be more and more demand for these commodities because, again, they're very useful, and without them, we would all be dead, basically. There's now a supply crunch, and so that demand going up with the supply crunch to us is just a really exciting opportunity. Again, I'm horrified, but I'm also excited. You know what I mean?
Sure. Yeah. Well, and we weren't putting money into R&D. We weren't putting money into infrastructure. We weren't putting money into all those
No,
things.
it was we Canada was living in a fantasy world.
Yeah,
of
I
of,
saw this
of
thing the other day and it said, man, we went from cows' farts are going to be the cause of global warming to we need to put data centers all over the countryside in like one election. And
I
it's the
mean,
truth.
the truth is like, yeah, like reality is as a hard as a nasty habit of not going away. Do you know what I mean?
Yep.
Like, um, and human beings, there's a lot of people who I think have been hitting. I mean, if you've been listening to the Loonie Hour podcast for 5 years, you know I've said this 5 years ago. I think it was bullshit then. It's bullshit now. And now what you're seeing is the media starting to, in Canada, certainly starting to come around and make it quote unquote okay for politicians and for people to be like, yeah, we need to build pipelines. You
Yeah.
know, um, like I like humans. I think we should have many more of us, you know? And in order to facilitate and to make us thrive, we need to invest in the things that keep us warm at night, cold in the summer, you know?
Keep our
And so I
bellies
think there
fed.
was
Yeah.
right, keep our bellies fed. And so this idea that we could somehow go backwards, it is to me again, I'm smiling because I like obviously you can tell I like what I do for a living. It's fun, but it's also like it exposes how childish so much of that policy was.
Yeah.
And I think and frankly, with all due respect, it's fun for me to like watch it, that bubble of stupidity sort of pop, you know? And by the way, Canada has like every single thing the world needs. Like the only thing that's
From like a
keeping,
natural
oh
resource
my God,
standpoint, we have
everything,
oil, we have timber, we have fresh water,
everything.
we have salt water. Yeah, yeah. Um,
Fundamentally, like at its core, and I'll leave you with this, like the one thing holding Canada back is the lack of imagination and frankly testicular fortitude of our politicians. We
love
just
it.
they're not
I
willing to
can get
just
totally behind that.
they're not
Yeah.
willing and they just won't get out of the way and say just do it. And like,
Okay. Two things because I want to be mindful of your time. But also it's the Everything Real Estate show. So I always have to bring it back to
oh
real
yeah,
estate. But
oh yeah, yeah,
uh,
I'm ready to answer this.
so real quick, in 60 seconds or less, explain the K-shaped economy to people, and then we'll
Oh,
go to real estate.
sure. The K-shaped economy is how you would describe. So there's other economists love shapes, V-shaped, U-shaped, this and that,
Charts. Yeah.
whatever. I love charts. The K-shape just simply describes that there's a portion of your population that is doing really, really well. You can think about people who bought their homes in 1990, whose pensions are paid up, whose children are
Funded.
in past
Yeah.
are already in past college, and think so that's going, let's say, up and then down. And then there's everyone else who has not have wages increases, have had their rents skyrocket, is watching food go up, and doesn't have the same opportunity that they may or may not have, their parents may have had. And so it's this idea that you have two very separate worlds. In Canada, I'll let you guess who votes in which direction, not to
Yeah.
get myself in trouble. But you have a group of people who are the stock market's at all-time highs, their house prices are basically at all-time highs, their kids are in school, their pensions are fully paid, and they're spending and they're happy. Why not? I'd be happy too. And then you have sort of another big chunk of people who don't have a pension, don't have a house, are seeing food prices go up 8-10% a year, et cetera, et cetera. And seeing a country that is dead set on regulating itself to death.
And essentially, so it shows you that the middle class is disappearing,
Right.
right? Where we used to have the bulk of the country was the middle class.
Yeah.
Now you essentially have the
Yeah.
upper class and the people that are paycheck to paycheck.
Yeah, that's exactly right. So, I mean, so now, to be fair, there's people who would disagree with this characterization. They say it's either too simple or it doesn't, and that's fair. I think that's a fair criticism. It is a hyper simple way of looking at an economy. There's obviously literally millions and billions of people. There's some loads of young people who've done extremely well, and there's loads of young people instead of going to college, they became a plumber and bought a house, and now they're, but these
Net
are
worth multimillionaire.
yeah,
Yeah.
there are heuristics, and they can be useful to describe what's going on.
Okay. Appreciate that. And so then last thing is let's talk about real estate. So what is your journey? What is your relationship to owning real estate? How has it been a benefit? Uh, Challenges? What are your experiences? Have
So
at it. And
I've made two investments in real estate. One was the worst investment ever.
okay.
And one has been the best investment I could have ever made ever. For me
Love
personally,
it.
not in monetary terms, but so the
Yeah.
first one I bought a condo or a flat, I should say, in London in 2015, and that was a disaster. I should have just put it in the stock market. I would have been a much happier person. In London, I sort of bought at the peak of the bubble, right before Brexit, if you're familiar with the UK
Yeah.
politics. And for 10 years, from 2015 to 2025, basically I had zero nominal appreciation of my asset there,
And
which
that's
is,
not factoring in the effects of inflation
yeah,
also.
which is
Yeah.
crazy. So that was a horrific investment. Now don't get me wrong, I loved the neighborhood. I saved some money because I paid down my mortgage, obviously, and I accumulated equity. But I
Plus, the
got zero.
alternative was rent, right?
Right. But I could have, all the alternative is you rent and then you put all the money in S&P 500, which
Sure.
tripled. And
Yeah.
so needless to say, that was not the best investment in the world. Now, don't get me wrong. I fell in love in that apartment. It was an excellent location. Like, what are you going to do? You can't go backwards.
Yep.
So that's the negative one. I sold it 2 years ago. Like I said, I made zero nominal appreciation. What are you going to do? The other piece of real estate that I own I own 4 acres of land in northern Quebec, which I bought in 2018.
Okay.
And that is the greatest piece of forest that I've ever been on ever, and I'll never sell it. And it's to me, it's the most meaningful and important thing in my life, frankly, as far as an asset is concerned. It's just basically lakefront property in northern Quebec in the Laurentians. And it's as far as I'm concerned, it's magic.
And so you're not saying that because
And I'll
it's
never
increased
sell
in
that.
value 4x. It's just
Even
you
if
love
I
it
honestly,
and
I
you love
wouldn't sell
going
it for
there.
$1 billion. It's just there's too much meaning emotionally. And one day my dream is to build a house up there.
Yeah. So that's one thing I say to a lot of people is like, you know what? Could you be better off, this decade in the stock market versus real estate? Sure. But you can't live inside your Apple stock. And at the end of the day, you need somewhere to live.
Yeah,
And like you can feel and experience and appreciate, the waves pounding on your shore, the trees that are in your yard.
yeah.
And it's something real that you can touch and feel and experience and whatever. Stocks you can't. However, what's the that's why I think the right answer is a little bit of everything.
I agree with you. I agree with you, and that's what we try to do for our clients. We try to break this balanced. Funny, a lot of people listening will go to their investment guy and they'll be like, oh, balance fund, balance fund. It's like we think that thing's broken. We very much are sort of an all the above with obviously some caveats. But yeah, I
Yeah.
love that piece of land to me. I'm 41. My dream is to build a country house there and to and they're not making more of it. I mean, that's the thing about the NIMBYs, right? And then the government regulation. Instead of allowing, Canada's one of the biggest countries in the world. We should have. I mean, it's ridiculous that housing is expensive in this country. It is purely a manufactured, like it is manufactured because of government regulation, and so until they find God and change their view on what should be done, I'm really grateful for the property I have up north. And I don't know if your listeners are familiar. Montreal, lots of properties are either up north or in the eastern townships. Both are beautiful. I just happen to go up north, and there you go.
Love it. Cool. Well, thank you so much for your time today. Appreciate you taking the time out of your schedule to chat with me, and hopefully it's a benefit to our listeners. And really look forward to having you in Windsor. And I think you're gonna be blown away by how small this area is, but how huge the impact is of the agriculture field and its impact on all of North America here. So
Yeah, I'm really looking forward to it, to be honest. So cool. Thank you
cool.
again for the
Awesome.
opportunity, and see you later.
Thanks, Rich. Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.